Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I got my coffee locked and loaded, ready to go, because we have to talk about the Bitcoin crash alongside gold and silver mega correction. And there are reasons for it. It's obviously very, very uncomfortable to look at portfolios, and we're getting straight to the point here without any intros and stream countdowns and so on. We're just getting directly to the stuff, I think, since we are now I would say very, very confirmed in this bear market, very deep in this bear market. We should always get straight to the point and maybe save our hype intros for bull market times. Now, looking at Bitcoin here, we are now down 41.1% from the all-time high, and we have received or reached a critical level where there might be a bounce expected. And I also want to stress really that we are on the way down, and I think at this point and everything that happens between here and a potential bottom here is good buying opportunities for DCA, right? But there could be still another 25% down with even overshooting wicks until we are reaching this 200-week moving average for Bitcoin. So we are not quite there yet, but this obviously was unprecedented in any case, because we have closed the here it is, even the fifth, but it's four consecutive red months, but it looks like October, November, December, January. February, we didn't close it. Okay, so 4 consecutive red months for Bitcoin. That hasn't happened really often, right? The last time was 2018 here, and there we see it. It was actually 5 months in a row. So it's not that February couldn't also close in the red. It would still be the second time, right, that this happens, not the first time at all. But we do see, okay, at some point we are expecting a bounce, and that might be happening exactly here. And what would happen if we bounce there, right? We would have this confluence point, we would have this point, and we would have this point. So overhead resistance here flipping into support. And usually what happens in those bear markets is that this previous support that established and was confirmed multiple times gets broken to the downside, right, like here. And then there is another, let's say, mirror image coming in from how we already went down. Okay, so this could be happening here. If we were to bounce, then in my opinion we could go revisit these levels of 90 something thousand, fail, that can bounce, right, and then we have ourselves a massive head and shoulders here, which then obviously would be that absolute reversal pattern. Does it have to happen? No, we can just go down, right? We can just go break through it and down. But I do think we really have a great buying opportunity here at our hands. We are very close to these levels already. I mean, that doesn't mean that if I had, for example, $10,000, I would reallocate them or allocate them here right now and then watch this fall. No. I would do it obviously in steps, right? Or DCA. For me, it's a savings plan that rolls some money into Bitcoin every week. And there we go. Yeah, silver went wild, absolutely. Okay, Bitcoin's crashing. So it doesn't look much like it, but that's actually a pretty big drawdown in a almost $30 trillion asset, right? I mean, here we have let's go into a little bit deeper time frame. We have gold going to revisit its bull market support band, and gold is currently down 20%, and I mean 20% on a almost $30 trillion asset is like 6 trillion that went somewhere else, right? I mean, let's not forget that doesn't mean that gold is now going to crash. It could, right? I mean, it could be the end of gold in the sense of gold rally, like gold parabolic, but it could be also correction and then go higher, right? Who knows? And I think this is due to some uncertainty. Going to quickly look at silver, and then we talk about the reasons. Same here, right? Silver crash. So there is a move, like someone took profit 40%. People were taking profit. And this is funny because if you're looking at the advertisers, they are obviously all advertising people to buy here. And if you look at the price right now, it would be the same as if you had bought in December 2025. So we are now, like, it just came back, right? But also here, bull market support band, and then there are moving averages that are expected to be revisited at some point. Yeah. So for me, I'm not touching that, right? I'm not touching gold and silver here. But everyone, of course, needs to make their own decisions. Now, this is interesting, right? As always, this guy has some very dramatic posts. Everything is crashing, but where's the money flowing to? Gold down 13%. It's now 20, right? Silver down 36, now 40. Bitcoin under 77,000. It's right now 75,000, right? So it's continuing to crash. Banks are crashing. The dollar is crashing. Top stocks are crashing. $12 trillion wiped out in a few days, and everyone's asking, where's the money going, right? Answer: the pockets of the people who told you to buy the top, right? And the funny thing is, now that things are coming down, everyone's like, get out of the market, right? In my comments, it seems like it seems like those are bots. But if you're looking at the comments of the last Crypto Morning Coffee stream on Friday, it's like every comment is like, oh, get out of the market. Bitcoin's going to 30,000. Get out of the market. Like, what do you mean, right? I mean, we are sitting at 75,000, and let's see, right? But for me, it's buying, not selling, right? Anyways, there are these recommendations to get out of the market. Whereas when everything was on all-time high, it was like, we have to get in now. This is the super cycle gold, super cycle silver, super cycle everything, copper, palladium, whatever, right? Yeah, and now the history changes, right? The moment that you're down, everyone's turning negative, right? Quick shout out to my rare hodlers, and while we're greeting them, please also use this time to smash up the like. It would be really great if we could go above 35 likes this time. It would be really great. So let's see who's here. Actually, I can't. There. Pro Legendary is here. Good morning to you, sup boys. Trucking Hank is here. Good morning to you as well. And we do have also G Money in the house. Good morning to you. Bringing the coffee. Of course, the coffee is locked and loaded and ready to go. Besides that, we do have also Patrick Bultman. Good morning to you as well. Welcome to all these fellow rare hodlers. And we have Tito, The Last Singurai, and Duck and Cover. Also, good morning to you. Very excited to be on this Crypto Morning Coffee here once more. And now let's talk about reasons, right? Reasons for the crash. So this here, if you have missed it, this is Kevin Warsh. And Kevin Warsh is going to be the new Fed chair, and he's nominated by Donald Trump. And the crazy thing is, Kevin Warsh is known as a hawk, now a dove, right? So he's known for restrictive monetary policy, not for like dropping rates to zero and quantitative easing, money printer all the way, right? He's not the type of guy. And so while we were hearing Donald Trump all the time saying, hey, Jerome Powell is not, he's too late, he has to, it's really crazy that you have this guy nominated, right? I mean, we will see he's Bitcoin friendly, but let's hear what he has to say about everything, basically, right? Let's listen in.
In the room, it hasn't been that big of a deal. We know it when we go to the grocery store, but we also own financial assets.
Yep.
Maybe we own some Bitcoin.
Yep.
52% of our fellow Americans own no financial assets. They don't have equity in their house. They don't have an account at Schwab. They don't have an account at Coinbase. They're living off their W-2 income. And this surge in prices have destroyed them. It's the most regressive tax any government could ever come up with.
Paycheck to paycheck.
Imagine if we had a central bank that had been deadly focused on that. I think we wouldn't have taken a divided country and made it more divided. When we have a big balance sheet, we're asking for the inflation that came. And as a final point, my own judgment is the story that I hear from many of my peers. Well, the inflation, well, that's not really the central bank's fault. That's because of Putin and the pandemic. Nonsense. A change in prices happens in a market economy because of shocks in the world. Changes in prices happen every day. That's not what inflation is. Inflation is when that change in prices become embedded. It's second and third order effects. And that's what's been the biggest harm to the country. My recommendation is a smaller balance sheet.
There you go, right? This is critical. My recommendation is smaller balance sheet. We have been offloading balance sheet already. The question that the market is asking now, and I think this is what we're seeing here, is will he offload the balance sheet even more once he's in control, right? Or is the offloading of the balance sheet that we have seen so far enough and he's going to manage with that?
Takes the Fed back to a more manageable size, a more serious job. And interestingly, if you can have a smaller balance sheet, you can have lower interest rates. Back to you.
And this is so this is why, in my opinion, that sentence is where the market goes. And this was on the World Economic Forum. I don't know when this was exactly, but the market basically says, okay, fuck, he's going to go in control. To lower rates. He's not going to lower rates just out of the blue. He might be offloading balance sheet into the market before he lowers the rates, right? And that, I think, is where the market gets scared, right? So yeah, let's continue here.
How much smaller?
When I joined, the Fed balance sheet was about $880 billion, included a bunch of foreign currencies. We do need some balance sheet to take to do our underlying business, to help run the treasuries, to help be a good counterparty to the rest of the central banks in the world. The economy's obviously grown since then. I wouldn't want to put a precise number on it, but right now the Fed balance sheet is about $7 trillion. They are participating in almost...
Yeah, this is something we have to look up how much it is now versus when the video was, but $17 trillion balance sheet, that sounds more like right now, right? But we are going to look it up in a second.
Almost every banking market, almost every day, the world has come to rely on the central bank's massive imprimatur. I would say it is trillions larger than it needs to be. We can't make this change overnight. But if markets knew that our objective was to get to a balance sheet that was as riskless as possible and as small as possible, and we would get there in due time and with a strategy, I think markets and market participants could well adjust to it. The central bank could then be a powerful central bank, but a more limited one, and I would argue wouldn't find its way in harm's way politically or economically. In the room.
Yeah, so I think this is great. By the way, right, I mean, look at Fed press conferences are going to be so much more interesting with this guy talking, right? I mean, I don't know if he will change his wording, but if he's like talking openly like this, it's going to be wild. I mean, the swings in the markets are going to be wild. We'll get much more out of that than the robotic. It's going to be even streamable, right? I mean, probably it's going to be streamable once this guy is in control. I mean, we do have still, this will take until May, right? Until he's in control. And I think markets might be going crazy until then. But he said more stuff, right? And this is something that we need to look deeper into it. And I think it's part of the market crashing. Let's listen.
This is our Reagan moment. It was 44 years ago at a time
Reagan
like this.
Moment.
President's in office. The media's given him hell. He's shaking up the establishment. He inherits a mess.
Yep.
People don't like what he's doing. There's some gauzy history about how easy it was.
They hate
French
it.
can speak to it better than I. It wasn't easy. And this is that moment. This is that.
That's it, right? People didn't like what he is doing. The market hated it. And this is our moment. Like he says, this is our moment. after 45 years, the cycle comes to an end. This is our moment. Okay, let's listen.
That hinge point in history that we see every couple of generations doesn't make it going to be easy, doesn't mean that every decision's obvious, but it's super exciting. So that's my thank you to the Reagan folks. And what George would say is the broad conduct of government policy doesn't have to be perfect. In fact, even in the heyday of the Reagan era, it never was. Government policy just can't be too destructive. And if we can achieve that, the U.S. economy will be in great shape. The problem over the course of the last several years is government policy has been too destructive. Too destructive to banks, too destructive to individual liberty in the post-COVID era, too destructive of technology and innovation. If over the course of the next few years we can just try to arrest most of that destruction, what we used to describe in economics as the micro foundations of macroeconomics, this has nothing to do with the brilliant conduct of monetary policy or fiscal policy.
I mean, this is pure American free market philosophy, right? I mean, not hindering innovation, liberty, right? This is pure what the market philosophy of the U.S. should be and is, right?
Policy. The micro foundations are what matter. And what is that a fancy word for? The culture of this country. Yep. The willingness to work hard, take a risk, have it fail, and try again. Everybody, no matter where you're from, there's no stigma associated with your station. You try to make it, and other people don't say, well, you're too big for your britches.
The American dream.
This is not an American birthright, but it's why the U.S. economy has chronically outperformed from 1946 until this very day. But if we do harm to those micro foundations, we decide we just want to try to hold on to what we've got. We let some of the things that are most important, like stable prices, eat at the conscience and the integrity of an opportunity society. Well, we're going to be no better off than a lot of these countries with whom we're trading with. That's why this moment is such an important moment. That's why getting policy right at this inflection point, like we haven't seen in 40.
And this is a paradigm shift. This is a structural shift, right? This is where, if he talks about this moment, I think this is also where the market gets scared. And it's not that the market like watched this video and then decided to get scared, right? I mean, his position was clear to market makers, and the most influential people around the government, president, and so on, they knew that this guy is coming, right? So they knew when to press the sell button, and they let this parabola in precious metals and also in the stock market rally into where they knew where to press the sell button, right? So this is basically like for every normal citizen, it's a bit of a rigged game, right?
44 years is huge. And if we do that, the 21st century will be our century. I'm not so worried about the other guys on the other side of the ocean. They're not doing a lot to motivate their technology sector. They are not freeing their people to create and innovate. A lot of them want to come to the US where they can do their best work. If we can focus on what we do best and try to copy someone else's 5-year plan, we're going to be just fine. So while this might seem like a scary moment for a lot of us, or hanging around government and the private sector, this is the best opportunity we've had, and I have a parochial American view. If the U.S. does well and can get through this inflection point as well as President Reagan did 44 years ago, our allies are going to love us like never before, and our adversaries will be scared of us. The essential thing is that we grow during this period, and if we do, that'll take care of a lot.
That is true, right? I mean, the market likes certainty, and if the engine of the world economy, which was the US throughout all these times, right, is doing well, right? I mean, obviously the market wants to see that, right? So, okay, here we have it, and then let's look at this, what was mentioned. I mean, he started out this part with saying, this is our Reagan moment, right? So, basically, that is the 45-year cycle began in 1980 and ended in November 2025. And the previous 45-year cycle began in 1933 and ended in 1978, right? I mean, if we're looking at those years, and specifically, if I say that as a German streamer, there was something big, fat, and very uncomfortable that happened throughout that 45-year cycle. Though we have to say that here, I mean, here it was a Cold War, right? Here it was a hot war. But both of these basically, I mean, this is almost like end of Cold War, right? I mean, 9 years until the Berlin Wall falls, but here that's 6 years before the Second World War starts, right? And yeah, so I to be honest, I didn't look at this. I mean, what is this picture? Does it have to do anything with that? Gold ratio. Is there more pictures to this? Oh yeah, okay. So here we have those cycles. Okay, so basically this is cycle 1 from 33 almost to somewhere here 80, where this massive drop happens, and then the second cycle is this one. But okay, I wouldn't say like this is not like the world is ending or so. But I think the market is scared of paradigm shifts like this, and especially if someone is in control of the most powerful central bank in the world, talking like that, that's also something where the market could get scared, right? Don't forget to smash up the like button, because we are getting into the bullish stuff. And of course, where does it come from? Michael Saylor, because everyone has their own view on this, and Michael Saylor has the bullish view on this. Michael Saylor is sitting on so much Bitcoin, and he is bullish, right? He says, and he said this on January 30th already, soon Kevin Warsh will be the first pro-Bitcoin chairman of the Federal Reserve. Let's listen to more Kevin Warsh so that we really have all the opinion side, so that we can make our own assessment what's really going on in the market. Let's listen to this. Regarding Bitcoin.
You made reference to Bitcoin, and I thought I heard a little bit of condescension that people are buying Bitcoin and these things.
But doesn't it, Charlie Munger, this is 2 or 3 years before he died, Charlie Munger attacked Bitcoin. He called it evil, in part because it would begin to undermine the Fed's ability to manage the economy.
Or it could provide market discipline. Or it could tell the world that things need to be fixed.
Yep.
Bitcoin does not make you nervous.
Bitcoin does not make me nervous. I can hearken back to a dinner I
Bitcoin makes us nervous once it's down 50%, right?
had here in 2011 with someone who is another guest on your show. I won't say his name.
He would.
Okay, I just did Mark Andreessen, who showed me the white paper. That was the original white paper. I wish I had understood as clearly as he did how transformative Bitcoin and this new technology would be. Bitcoin doesn't trouble me. I think of it as an important asset that can help inform policymakers when they're doing things right and wrong. It is not a substitute to the dollar. I think it can often be a very good policeman for policy. And if I were to speak more broadly to what did Charlie Munger and others perhaps have in mind, there is a proliferation of securities that go under all sorts of names. Many, if not most of them, are not worth what they might be being traded for. So what did Charlie say, and maybe his pal Warren say? There's the innovators, the imitators, and the incompetents. They're real innovators that are happening in and around that new technology. And what I would try to impart towards businesses and bankers is that the underlying technology that Mark showed me in that white paper, or tried to show me in that white paper, it's just software. It's just the newest, coolest software that will provide us an ability to do things that we could never have done before. Can the software be used for good and evil? Yes, both, like all software. Right. So I don't cast aspersions like that. If there's a final point, it's these technologies are being built here. I don't just mean on Stanford campus. I believe in the United States. And the world's most talented engineers from China and Europe and everywhere, they come to the United States even now to try to build this stuff. And my view is by building it here, that gives us an opportunity to be more productive and create something very special over.
I think so this video ends here with the sentence, but I think there are a couple of important things. First off, Bitcoin doesn't make him nervous. Second, Bitcoin is not replacing the US dollar. Okay, two things that from a Fed chair is very good to see, because Bitcoin is not perceived as a threat. Instead, Bitcoin is perceived as a a means to show distress in the market, to show that something is wrong. Bitcoin is perceived as something new, that new things can be done with and that can be used in a different way. And I want to give one example that I find very interesting, right? I mean, many people struggle to find or to remember the value proposition of Bitcoin versus, for example, gold, right? And I want to give you only one out of a list of many points here to always keep in the back of your mind. And that is the cost of validation. Think about the cost of validation for for gold, right? Think about what does it cost you if you have an ounce of gold, right? What does it cost you or the manufacturer to validate that this is real gold, right? There needs to be a person sitting there or a machine looking at it and measuring the quality of the gold, measuring the weight of the gold, and then printing a validated certificate, an accredited and globally accepted certificate that this ounce of gold is complete, original, of purity, has the exact same weight, and has been measured, and that the other party where you sell this physical gold to can trust it. Okay? So there is a lot of money in this stream, right? Think about which agencies or institutions are certifying gold, right? Think about printing that certificate and putting it to your gold ounce or gold bar, right? Think about what it costs you to take it somewhere to have it looked and verified at blah blah and to sell it, right? So physical gold really undergoes all this stuff. Bitcoin has a global validator network that validates your Bitcoin basically in seconds with the cost of less than $1, right? Even if you're sending millions and billions throughout the network. And it's 100% working since its inception, right? Never failed. So I think that's just one of the things where this guy says it works in a different way. It's new. The software lets us do things in a different way, right? That doesn't mean it's payment and substituting the dollar, but it means I can use it much more reliable than physical gold, right? And then there is the finite aspect on top of that, right? Not only is it that, but for example with silver, right? With silver we are seeing the narrative was in the parabola. Silver is being used everywhere, right? The narrative is silver is being used in solar panels, in AI, in cars, and whatever, right? I mean, they're basically asking ChatGPT where silver used in, and then that's an argument for why silver is going up, right? And then I ask you, why the fuck didn't silver go up before? Because it's not like we started to build electric vehicles today, right? It's not like we are producing solar panels today. Maybe we're producing more, but then you would assume a gradual pump or gradual increase in silver price here. But what we did see is the silver price was lingering around for 15 years. I mean, we can look at it again, right? I mean, here, silver price, right? Where did this happen, right? Where did this parabola happen? It's really here, right? I mean, we were in a bear market for silver basically since we dropped below 34 in September 2012. And then almost like 13 years we were in a silver bear market basically until we broke out here and suddenly it goes into the rally. Let's cross-check this narrative. Like, silver is needed everywhere. You're telling me, or whoever defends this narrative, you're telling me that in September 22, we were not building electric vehicles, we were not building solar panels. Does the quantity justify a price of 120 instead of 18 is like 6x. I don't think so, right? I mean, so there's always a narrative. What I want to show is there's always a narrative to justify the price manipulation, the price movement, right? Whereas gold, for example, right? Silver followed gold, right? If you see, gold rallied way before silver. Silver followed gold, but now what's the reasoning for gold? Is like gold is needed in the earrings of my wife, the necklace of my wife, right? I don't know. Gold is needed where? No, it's like the market structure. The market started panicking here, right? Started the fear rally. This is the fear rally, right? And then it was so high, in my opinion, that people decided, gold is really, really high. Let me buy the next best thing. It's like when Bitcoin is already at all-time highs and Ethereum explodes, like in 2021, in my opinion, right? So this is all narrative check. And what doesn't have a narrative is Bitcoin, because it didn't rally here, right? It didn't explode. It went down. So Bitcoin is now dead. It's shit. It's actually was only a high. Blah blah. No one talks good about Bitcoin anymore except Michael Saylor, right? For me, that means I'm not touching gold. I'm not touching silver, and I already started since we dropped below 100K to slowly but surely accumulate more Bitcoin, stacking sats. Continuously in a savings plan. I will continue to do so. Let's look at the power of law. I mean, for me, everything that's below that was not the plan. Let me reset. Where can I reset this? Let me reset this just like that. There we go. Power of law, right? You see it here. We do see the price, right, where we are, 75,000 right now. The absolute bottom band of power of law sits at 52,549 and is by the day increasing, right? If we were to go like to mid-year, we would receive 60,000 as the absolute bottom band for power of law. And whereas we didn't reach anything above fair value, right? This time we didn't really significantly go above fair value. Whereas fair value is right now already sitting at 150,000 fair value, and the absolute upper explosion band at 500,000. For me, that means we are 50% below fair value price, and that is a buy for me, right? And if we can get 70% below that to 55,000 or 53,000, whatever that is, or 60,000 in a couple of months, that's an absolute buy for me still then, right? So right now I want to increase my weekly purchases, right? I want to increase my weekly purchases at these price levels to be able to stack more at lower prices. And if we're going below 70,000, I will increase it again, right? So this is what I'm going to do. So here, this is the plan laid out, in my opinion, right? And maybe let's quickly justify the where we are, right? That part where the bottom should be, right? I showed this yesterday. This is the production cost. Because we have some minor capitulation, miners going out of business, the production cost is now at 69,000 and the electrical cost at 55,000. That's exactly where we expect the power of law band and where we see the moving average headed, right? The moving average, the 200-week moving average, is sitting at 57,100, right? It's exactly between the electrical cost and the cost of production. In my opinion, it's very valid, and we are going to call this out here. Let me find a call out. Let me find a call out. I think that should be it. And we're going to what makes sense here. We're going to August. We're going to the depth of the market, and we're going to 60K ish. And we're saying that's going to be the Bitcoin bottom. Bitcoin bottom. That doesn't mean that I'm waiting until then to buy, right? I'm going to DCA all the way down here, but I'm expecting Bitcoin to go there, form a bottom, and then go up again, right? And this looks like a pullback in a bull market then, but I mean, it beautifully coincides with this level of the previous bull market and this insanely long consolidation that we had here before we broke out into the rest of the bull market that we had here, right? It beautifully coincides with all of these levels. I'd say that's what I would expect. But not without, maybe that was a little bit, let me draw this again. Not without, where the fuck is my pen? Where is the drawing feature? Is it here? Yeah, there. Let me get rid of this and draw it a little bit differently, because what I could imagine is that before we go is more like this. We go up and then down. Let's do it a little bit more squeezed in. Like we go up and then down and then like this, and then we form a bottom and then we come back up, right? Something like that is probably more realistic, that we get a bounce at some point and don't fall straight down there, right? G-Flow asks, are you buying anything right now? Yes, Bitcoin. So I'm buying Bitcoin. Once we are seeing the bottom formation unfolding in a little bit more educated manner, then I'm going to probably also buy some stuff like large cap altcoin. Adam, what's good? Good to see you. Energy, hey, how are you doing? Rodolfo says, hi hodler, what are you looking to stack from this downtrend? Exactly that. Bitcoin, right? I want to really have more exposure to Bitcoin. And then at some point when we are more like in this territory here, down here, and we see really that alts are massacred, then I'll also buy more Ethereum, right? Then I will buy Ethereum and probably something like Solana, Sui, stuff like that, right? And then I'll see which of the smaller altcoins that survived are still building like really good stuff. And then, because I think at some point there will be another altcoin season when no one believes it anymore and thinks everything's dead and most of the coins died, then there will be probably also an altcoin season, right? I do believe that, and I'm going to speculate on that with a small percentage of my portfolio, right? Because people want to gamble in this market. I think they come back to gambling in the market, and yeah. But that's it. Guys, make sure to smash up the like button if you like these morning streams. Subscribe to the channel. Notifications on. And wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon. And I catch you in the next Crypto Morning Coffee live stream or in the next video. Good things are coming. Stay tuned. Have a good day and stay strong. Bye-bye.